Welcome back to another video. It's Shoddy Trades, and today I'll be going over my EUR USD trade from October 31st, 2023, which is Tuesday. Before I go over any of that though, I would like to go over something else far more important, which is our mental state when it comes to trading and life in general. I'm in a lot of servers through Discord, and I've been noticing a lot how people get really angry, sad, frustrated, whatever the case may be, when they lose a trade or miss out on a trade or anything like that. Now, I used to be the same way, and you have to learn really quickly that if you have any emotions in trading, you're going to lose. You're going to fail. And I'm being as blunt and as honest as I could be. I learned the hard way, and I'm still learning to this day how to not have any emotions consistently when it comes to trading. It's a work in progress day by day, but you have to work on it much more than you work on actual charting skills in order for you to become profitable in trading in this industry. Fear of missing out, like you cannot fear anything, and fear is an illusion of the mind. And what I mean by that is, if say you're scared of something, right? Like, say a lot of people are scared of spiders, for example. When they see a spider, they jump, run, scream, whatever. That is coming from their mind. They're scared because their mind is telling them to be scared. Change your thoughts, and the things around you will change. And that is something somebody has told me my whole life, and to this day, it works. And I've been seeing it firsthand from the person that has told me, and and now I'm seeing it for others and myself. I just really want to iterate that emotions is the most important thing when it comes to trading. Nothing else comes close. And I'm going over this because earlier this morning for London session, I had taken a trade and I had lost it, okay? It wasn't a big loss at all. It was very small, and I still didn't have any emotions because my analysis was correct in terms of what I thought and what I saw and what I normally do trade. It just didn't work in this specific scenario. And that's okay, because nobody has a 100% win rate. It's not going to happen. It's not possible in this industry. It's how you bounce back. That's what makes that's the difference between a great trader and an average trader. How you bounce back. I couldn't figure out how to put that in words, but anyways, to begin with the actual review, I'm gonna go over the small loss first and then the win. My small loss, I was using CLS with GB, and I was anticipating a Tuesday high of week within our CLS cycles. And what I mean by that is each CLS 90-minute cycle, you can count as a weekday, starting from 2 a.m. until 9:30 a.m. Now, every 90 minutes from 2 a.m., you count as a day: Monday, Tuesday, Wednesday, Thursday, Friday. And if you understand weekly profiles, you can understand where price is going to go based off our CLS mini profiles. Okay, like our big weekly profiles, everybody should know if you trade ICT or whatever. I use these within our smaller cycles, and you can see it right here. If I turn off Goldbach, you can see it right here alone, how from this line, from this area right here until 9:30, you could literally see the market maker model form. And this is just off CLS alone, from 2 until 9:30, Monday, Tuesday. In this case, we had a Wednesday high of week, Wednesday weekly reversal. Our profile, right here, Wednesday weekly reversal. That's exactly what happened. Wednesday high of week, and then Thursday held the high, and Friday we dumped. All right, this is just CLS alone. You could use that to help frame your bias. Now, if we combine that with our Goldbach, you'll see, which is our red numbers here, from 11 p.m. From 5 a.m. to 9:30 a.m., you can draw your Fibonacci time for your Goldbach cycles, your accumulation, manipulation, distribution. All right, and I'm gonna remove our CLS for now for the video purposes, but if you see, we have our accumulation, manipulation, and then from 7:45 onwards, we distribute to the downside. Okay, and this high right here was an 81-minute inverse fair value gap right here that we had stabbed into. All right, I didn't get it. I wasn't really on the charts at this time, so I didn't get an entry from there. But since we stabbed into that higher time frame PD array, you can expect lower prices from then on out. And then, like I said, following CLS and GB, if they align, that's high probability. In this case, it aligns with our Wednesday weekly reversal, our Thursday consolidation, but we're still dropping down a little bit. And then this small gray box right here is a 17-minute inverse fair value gap, which I had initially wanted to enter from, but again, I wasn't on the chart at this time. I was a few minutes late, but you could have entered from here into the 17-minute fair value gap after we take out our first intermediate term high right here, which was created first. You could have entered from there. Now, since I didn't get an entry from there, I entered from this bullish fair value gap. Now, you might be asking, why'd you enter from a bullish? Well, our higher time frame bias is bearish, and I've already had a bearish bias for the day. And we in this case, we know news is coming. We had news at 8:30 this morning, and I entered literally right before that, which is our 0.77 line I'd entered from. And that line is known for reversals, or that's the D1, D2 split line. That line's known for reversals or continuations. And when price came into this bullish fair value gap the first time, and we closed inside of it, that gave me more indication that we're getting ready to go further down. We're going to sell off even further, because when price comes down into a fair value gap, you don't want to see it close inside of that fair value gap. You can see a wick inside of it, but generally, if we're going to hold it, you want to see a close outside of it. We didn't get that. And then this next candle, we completely closed inside of it. So that gives you all the confirmation you need to go short. And that's exactly what happened. I went short, and you can see right here, again, we went short, taking partials off at where previous day high was at. And then I could have held even further to our Monday's low, which is still, as I'm recording this, we haven't hit it yet. But I took off early because I didn't want to be greedy, and I just wanted to make the amount I wanted to make. And that's exactly what we did. We had that Wednesday high of week reversal, the market maker sell model. Like, it was beautiful. And you can use it just with CLS. It lined up with CLS perfectly. All right. Now, if I turn on our Goldbach levels, okay, or our ranges here, you can see that this first high right here had rejected from the 83 line perfectly, which is also our fair value gap area. And you can see there's a BPR right here, there's a fair value gap right here, and we respected it the first time, came back down, reclaimed that level, respected it again, strong hold. That's a strong hold on that GB level. That's where you want to be entering short from, okay? And again, right here, we come through, we reject this 71, but then we break through it, enter from that rejection right there. And then your targets, you could have as many targets as you want. Like, you have this low, this low, this low. It doesn't matter, because you know our bias is already bearish for the day, all right? Now, going back to this loss, it was really a low probability setup looking back at it in hindsight, because I was trying to trade the reversal instead of trading the trend, that's on me. And like I said, learn from it, move on. And Next trade, bounce back, boom, perfect. Make back exactly what you lost plus a ton more. All right. As also, say you entered from the 83 level, you can literally just target the opposing 83 level right here, and that can be your trade, 83 to 83 or 83 to 17, because with Goldbach, 83 it comes in clusters of 100. So if you have a rejection from one level, you can look for the opposing level that adds up to 100 to either enter from or take profit from. And that model is from AJ. He's a great Goldbach trader, and he has his own model who he explains it in more detail than what I do, because I don't particularly trade his model, but it's all similar in a way. So if you guys want to check him out, I'll link his Twitter in the description. And yeah, that's pretty much it for the video. I hope you guys enjoyed it, and there will be a lot more in the future.